following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. Been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. As we kick into 2016, folks, let's make it a great one. Let's see. I'm going to read two cards today. I start with the idea that nothing is impossible and that everything can be done in the end. Bingo. It is better to believe than to disbelieve. In doing so, you bring everything to the realm of possibility. Albert Einstein. Yesterday's gone. Tomorrow's not here. What are you doing right now? Great time to think about it, folks. Kick into 2016 and make it a great one. Market-wise, let's take a look at it out here. Dow Industrials are down 125. Nasdaq's off 37. S&Ps are down 12. Gold contract flat at 1,058. You got silver down down 3 cents, $13.83. Platinum is up 18 at $8.90 an ounce. Copper flat at $2.13 a pound. Light sweet crude up 58 cents, trading at $37.18 a barrel. Bonds, 10-year up 8 ticks, 125.27. 30 up 6 ticks, 153.14. Both the 10 and the 30-year bond, folks, refuse to get under their lowest swing points. Pretty amazing, actually, particularly because we know that the Fed has already gone up on interest rates by a quarter point. They're claiming they want to go up another percent. Bottom line, it looks like there's more demand still, less bonds. Bottom line, bonds want higher price, lower yield. King dollar up 361 ticks, trading out at 98.71. The euro is down 64 at 108, and the yen is trading at 120.18. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look. And if we start with the SPY, what you're going to see is this. Bottom line, you get the S&Ps coming in for a slight loss for the year. That being said, what you have is this, is that it's pretty amazing. Since last May, folks, what we have is that we have about 7 to 8 lower highs. The high was established this year, May 20th, May 21st. That high was established out here on the SPY at 213. You're at 204.50 right now. I suspect what you're going to see when we open up come January 4th is that it's going to be going after this lower point of 199, and the benchmark on this is 195.03. The benchmark specifically is where we came off the bottom in October 2nd. The NDX 100, it's the exact same setup, same benchmark that we're talking about. When you take a look at the QQQ, what you have is that the QQQ is down $1.12 today. We're at 112.15. The first lowest swing point that it wants to go after is the 109.38. That was the swing point that was established on December 14th. And what I expect you're going to see is that we're going to get right into the 104.01, which is also that benchmark from the October 2nd level. And, you know, we'll see if, in fact, it's going to decide to blow that away. The culprit out here inside all the indices today that is pushing these indices around. Apple's only down $2, but Apple is a culprit because of the fact that the weighting structure is so big in Apple. It's not only going after its lowest swing point, it's already taken it out, that lowest swing point being 105.81. Now, the last time that we came down there, that was December 18th. We're taking it out with lighter volume. I suspect that what you have is that, and it's pretty amazing, Apple is going to be going after fast and furious, this $92 area from August 24th. The high of August 24th, when Apple got toasted, as the market had, Apple went from 108 to 92. It's a high volume swing low at the 92 area, and I suspect it's going to go right after it. Now we take a look at the indices themselves, the strength versus the weakness. This is what we have. Inside the Dow Industrials, the only stock that's positive right now is GE. GE is up 23 cents. The laggards, Apple's number one, is down 228. Microsoft's number two, down 77 cents. Coke's number three, down 60 cents. And Intel is down 48 cents. Now, when you take a look at the Dow Industrials, okay, so the Dow Industrials, you get 30 stocks, right? So from highs to lows this year, this is what you have. The Dow right now is at 17,458, and the Dow started the year out at 17,823. So you're approximately, about 350 points off that high, which is not a huge amount, by the way. What is a huge amount, though, is this, and this is what you absolutely want to wrap your head around. The New York Composite, folks, is the stock market. The difference between 30 stocks and 5,000, guess what? This is what the composite is. So when you take a look at the composite, what you're going to see, the composite is trading out at 10,182. Well, the composite started off the year at 10,839. So the composite is down 5%. That's the New York Composite. The NASDAQ Composite is going to be up about 6.5%. The composite right now is down 42. We're at 5,023. And the composite started the year off at 4,736. So we're up 300 points, approximately 5%, 6% inside that composite. Gold contract. What do we have with gold? Gold is at 1,059 right now. Now, for a long weekend, gold held its price today. They could have took gold right to the cleaners today. Gold's been consolidating at these lows out here, at the 1,064 low to 1,050 low. Bottom line, has light volume, rejected the 1056 area. Good showing out here for gold today. Silver needs to get back inside the $14 area. Silver right now is trading at $13.82. Bonds. This is the Eveready bond market. Going into 2016, folks, the bond market is, everyone's been watching the bond market for 3 or 4 years here, because of the fact that bonds just haven't stopped going up. In fact, bonds, so check this out. Bonds have gone up, folks, in the bull market since 1980. That's almost unheard. Well, it is unheard of. It's the longest bull market I've ever seen in my life. Anyway, that being said, what you still have inside this bond market is you have higher lows. You have a high that hasn't been tested yet. You have the Fed that raised rates, and the bond market still won't break a swing low. I suspect what that's all about is this, is that the broader market wants to go south. Every time the broader markets go south, guess what? Money rushes into the bond market. Why? Which is common sense to get your money back. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back. Dow down 139. NASDAQ off 42. S&P's off 14. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 120. You get the NASDAQ off 39. S&Ps are down 11.5. And, folks, as we kick into 2016, we're going to have a new schedule at TFNN. First off, I do want to thank each and every one of you for listening to us out here, for growling and prowling with us. We wouldn't be here if we didn't have you folks out there. Right now we broadcast 5 days a week, live content. Monday, Wednesday, Friday, we do 9 hours from 8 o'clock in the morning until 5 in the afternoon. Tuesday, Thursday, we do 8 to 6. Coming January 4th, what we're going to be doing is this. On Monday, Wednesday, and Friday, we're still going to be broadcasting 9 hours a day, 8 o'clock in the morning to 5 in the afternoon. John Logan kicks us off. On Tuesday and Thursday, we're going to be broadcasting from 7 o'clock in the morning till 6 in the afternoon. Tuesday and Thursday at 7 in the morning, we're going to start live broadcasting. We get our man Nico Dahan, Paige Clark. They do a nice health show. We're going to put that on from 7 to 8 in the morning, keep you healthy before we start trading. Then what is also happening is that my son and I right now, we do a program every morning at 10 o'clock. That's the Money Masters program. We are going to be doing Monday and Friday. We're going to be doing the Bull Bear Binary Option Hour. That's with my son Tom, as well as Daryl Martin. That's Monday and Friday. We have a new edition, huge edition we're really proud of. TD Ameritrade Thinkorswim is doing 5 days a week, swim lessons at noontime. So that's going to be noon. And so bottom line, you can check it out over the weekend at TFNN. And don't forget, folks, at TFNN, you can get all the programming right on your cell phone. TFNN.mobi gets you the full audio. You want to get Tiger TV? Just go to TFNN.com on your phone, hit Tiger TV. Servers are going to understand what type of device you're on. You're going to get the audio as well as the video. And once again, so that's live content every trading day. Now, we take that live content and replay it, and we have plenty of archives. So we really do want to thank you, number one, and we're going to kick into 2016, and we are going to make it a great one. Let's go take a look at some of the higher volume stocks out here. Well, first off, let's look at the higher volume stocks first. So what we have out here, of course, we've been in holiday trading for a week and a half here. Fast markets both ways. As I said a little bit earlier, though, the market itself hasn't made a new high since last May. The higher volume stocks out here today, Apple's the culprit. Apple's down $1.98. You have Facebook down 133, no big deal there. JP Morgan's off 29. Inside the Dow Industrials, what we have is that you have IBM down 122, Marvell's off 29 cents, Boeing's off 146. You get Disney down 110. If we do go over and we take a look at Disney, Disney has a huge problem, folks. This is pretty amazing, too. When you know that Star Wars is a monster hit, huge hit. What is not a huge hit, however, is the amount of people that are cutting the cord and the amount of people that are not going to be paying for ESPN, because the way that that whole cord-cutting deal has come on is the aspect that we pay more for ESPN and all those bundles than anything. Well, bottom line, Disney's losing huge amounts of business. It's going to get bigger. Disney is trading at 105.18. Now, this has a high volume swing low at $90. That $90 is left from the 28th of August, the week of the 28th, and I expect that we're going to be down there, and it's going to basically test that baby out. 2016, you are absolutely going to see huge changes inside the structure of how we get entertainment, do entertainment, all of the above. Because what has happened is that we can see it even at TFNN, folks. What has happened is this. So picture, when Broadcast.com went public, this goes back to 1996, I think. Yeah, 1996. When they went public, we were in the prospectus, Microsoft was in the prospectus, and Intel was in the prospectus. I couldn't even believe I was in the prospectus. And what it was is this. We were one of the first streamers on the web, and we used Broadcast.com. When I read this, I was reading this prospectus, and I'm saying to myself, I can't believe this. And this is why I couldn't believe it. They were going public at an astronomical valuation. We were paying Broadcast.com at that point $5,000 a month to broadcast. Now listen to this. This is sick. Do you know how many listeners? So picture this. We were on the radio, as we are right now, but we were also broadcasting on the web. And I just felt that the web was where it was at, and that's how it was going to grow out. So we were there very early. And that's why even, you know how we have TFNN, we were that early. I wish I kept more. I had a lot of different monikers that were only 3 or 4 letters. But anyway, we're paying $5,000. But this is the kicker. When that thing was going public, I called my sales guy up. I says, "You're going to give us a break in your perspectives?" He said, no, not even close. Well, wait to hear this. We had 352 listeners. That's it. 352 listeners. And I forget what the valuation was, but Mark Cuban, brain beyond belief, he ended up selling it, I think, to Yahoo for like $1 billion. I mean, it's amazing. But now, okay, so now fast forward to where we are now. Now, we've done audio for years. We started doing video about 5 or 6 years ago. But what is happening is 2 different things. The acceleration is getting bigger for companies as us and other companies. What's also happening, though, is that we're all getting used to it, including, so picture, we're in the business, and even when you're in the business, you know, you're still watching TV, but now I can see what has happened in the course of a year. Everything is so much easier. It's faster. We're all going to be cord cutting very quickly because content is just getting delivered differently, and I suspect where the next content is going to be dramatically different is in our cars. Because what I've never quite really got is that it's so easy to deliver all the content that's on its web right through our radio. And it's like, why isn't that happening? Well, that has started kicking in this past year. We're going to see that in a big way. You're going to go out, you're going to either talk to your car and say, okay, I want this program on, or whatever website you want to go to. That's the first one. All what ends up happening, you just hit the button and you're going to pop up. Let's go to Don in Odessa. Hey, Don, what's going on?
Hey, Tom. Thanks for taking the call.
Sure. Happy New Year, man.
That's what I called you to say.
That's a beautiful thing. I appreciate it, man.
Real easy one here. I just wanted to say thank you and Happy New Year.
Well, I appreciate it, man. Let's make it a great one.
I will, and you too.
Okay,
Bye-bye.
man. Thanks so much. And you know, folks, when depending on how long you've been listening, you know, when I end these programs, I always end them with whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, you step into it, you take ownership of it, and you fly with it. Practice that, folks. Okay. It works. I don't know how it works, but I'm telling you, and I go on streaks. You know, sometimes you're real, conscientious about it, and then other times you're not. But if you stay conscientious about that, your dreams can come true, and it's really wild because we are more powerful than any of us realize at all. That's the key. Well, I think that's one of the keys that you can write your own story. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. Dow Industrials down 133. NASDAQ down 42. S&P's off 13.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is off 130. You get the NASDAQ off 41. S&Ps are off 13. If we go over to the cash S&P, so we're going to be about 10 points under the open of this year, folks. Right now, the cash S&P is at 2049. We opened at 2058. You know, that's not the end of the world. There's no doubt about that. And that totally makes sense, too. And this is why, you know, if you pull... I'm going to pull up a longer-term chart of the S&P. Actually, I'm going to put the SPY up so you can see what we've been doing for this past year. I'm actually going to put it up. I'm going to put it up in a weekly, and I'm going to put it up for 5 years. You know, what you'll see is that from this run up to these highs started October of 2011. And, of course, we're going into January of 2016. Well, the run had, you know, a couple blurps in it, but it was really a straight line run. You know, straight line. If we take a look at the SPY was trading at 110, 107 to 117 in October of 2011. We make the run, you know, you had two, well, you actually had three pretty good retracements in the course of 5 years, which is nothing, by the way, okay? Now, that being said, what you had is this, is that the largest retracement was last August, of 2014. In September, we were at 201, and by October, we were at 181. So you almost had a, that's 20 points, that was a 10% retracement, okay? That was the largest retracement we had in 5 years. Now, that being said, the market came roaring back in October of 2014, and we ended up in the last week of December, we ended up at 2058 or 208 inside the SPY. Okay, so now what do we do? Well, what we did here all year long, folks, is that we were at highs. We had lighter volume, which my take is distribution. You had a vicious downdraft in August, and that to me is where the market broke down, and the market hasn't been able to make it back since that point. Now, when you have an extension from 2011 to 2014, there was no reason really for anyone, a long-term holder, to sell at that point. Because of why? Because of the fact they've been getting rewarded for 5 years for not selling. You know, they've had a little volatility, but the biggest contraction had was 10%, which is nothing. Now, that being said, right now, different ball game. What that different ball game is that you have people thinking like, okay, hold it, I haven't got rewarded. I've been in this market for a year. I've taken the volatility. Maybe it's time that I take some profits. Number one, my take is that the larger players have been moving out of this market for a year. It takes a long time, folks, for large operators to get out of the market. That's the first one. The second one gets a little more dangerous, and what the second one comes down to is this. There are still plenty of people that have good profits that are more than likely saying, I want to put this off for one more year before I pay taxes on it. And I can tell you something. You never should be worried about paying taxes on profits. That is one of the most insane things in the world, folks, okay? Because guess what happens? Those profits disappear. One of the lessons that I learned, and thank God that I wasn't the one that had to learn it, and this is what it was. In the 1980s, for all you folks up in Boston, you're going to know this building. I had the first floor of 1 McKinley Place, and that was right across the street from Faneuil Hall. That's where a great building, really dynamite the whole ball of wax. And this is, you know, when real estate really just started taking off. And I remember there was a guy across the street from me, and all he was doing was complaining about he didn't want to. I was trying to buy another piece of property off him. He didn't want to sell the piece of property because he felt that he had to pay so many taxes. The guy above me was the exact same way, and I says, "Man, this is really crazy." You know that at the time I says I didn't really think it was crazy. At the time I says, "Well, they didn't want to pay any taxes," but I said, well, how do you make any money? That's what I was thinking myself. Bottom line, I could fast forward 3 to 4 years after that, they not only lost the amount of profits they have, that was one of the first, well, it was the second real estate crash I actually saw. Because what ended up happening is this, is that Boston crashed. So then we had the 87 stock market crash. Boston crashed in like 89. Boston crashed, Florida crashed, Dallas crashed, Miami crashed, Houston crashed, Alaska crashed, Orange County crashed. Bottom line, folks, you get money, guess what? Take it, okay? take it. Because what does happen, those cycles always come around. Don't worry about paying taxes. So it was great because I was only 30 years old at that point. That was a great lesson that when you make money, take it. Let's go to Tucker in Longwood, Florida. Hey, Tucker, what's going on?
Hey, Tom. Happy New Year to you.
Happy New Year to you, man. Let's make it a great one.
Yeah, also to your fellow show hosts and your wonderful staff. They really got a super group around you.
I'm so lucky, man. And to all you listeners, too, because we are really, really blessed. There's no doubt, man. So what are we going to look at today?
I want to look at SWN. I missed it on the first upswing, and then today it had a 382 retracement from the large move, and I took my eye off the ball and missed it.
Let's take a look. So you got SWN, it's Southwest Energy, independent energy company. They focus on natural gas, crude oil exploration development. The low for the year is $5. The high is $29. Okay. Oh, I see what you're looking at. Okay, so as the natural gas market, the oil market has got smoked, this also has gone from $49. What a one-way trip. Oh, my God. $49 to $5. Wow. That's intense, man.
I watched it all the way down, and then I couldn't pull the trigger when it got down to 5.
That's all right. That's all right. There's plenty of upside in this thing. So this wants to go to 1057. So 1057 is the last, that's October 23rd. That's the last time that had some real juicy volume, outside of the trashing on the way down. But then it did test the lows with lighter volume. And the first day that it perked up was the 18th of December. So now the question is 719, 22 million shares. I wouldn't buy it here today because this is what you have. So your swing point that it's getting into right now is $7.19. That's 22 million shares. You've done 12. It's like if this is an ABC up, then what you have, it's a $2.19 ABC up, which gets you $8.50. This is a tough one, man. Because $8.70 it can make a run to right now too.
Be patient.
Well, I can see what you're saying. See, the buy was yesterday. I can see what you're talking about. It went to 625. It had 15 million shares going right against $6, which had 24 million. And right against, yeah. I'd still be patient, man. You can see, just even like with the oil market today, Tucker, is that the oil market, was up 3% and then it gave up almost all those gains. You know what I'm saying?
Right. All right.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We'll come right back. Dow right now is down 112. The Nasdaq's up 37. S&P's are down 11. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is off 120, Nasdaq's off 40, S&Ps are off 12.5. And more than likely, if you've been around the TV at all, what you're going to see is that there is a huge fire in a luxury hotel in Dubai. Now, the cool thing is, folks, that there's been a few people that have slight injuries, like 15, but nothing heavy. And when you're watching this fire, right, now it's in a monster building. Now, this is the third fire that they've had in high-rises in Dubai in the last few years. But when you're watching this fire, what you want to wrap your head around is this, is that what you're going to see is that when you're looking at the outside, you're going to see that the floors are all up. But what has also happened is this, is that the fire is contained. And what's so cool, I was looking at it earlier, and I started reading about it a bit. What happens in commercial buildings, folks, and this is important when you're even building apartments, is that when you're building apartments or commercial buildings, there should be firewalls between floors and walls and ventilation shafts, everything, in order to stop fires very quickly. Now, what happens in a commercial building, you have that aspect. Then what you also have is you have fire doors that go close automatically. And it looks to me before I got on the air, it looks to me that they're actually, without a huge amount of firefighters actually coming in, it looks like it's actually going to be contained. You know, it went up the side of the wall, and there's quite a few floors that did get hit. But it's really going to be cool watching if, in fact, that did get contained, because that's a huge safety issue. And it's you know, I'm not quite sure why there's been 3 fires in the last couple of years in Dubai in those large buildings. But the cool thing is that it seems that this one, it's at the Address Hotel, is working as it should work, meaning that the fire gets contained, the fire actually should smother itself out after a certain point. You know, it gets enough time for the firefighters to get in without getting hurt themselves. You know, so we'll see where that does shake out, but it's pretty wild. The thing that is amazing also is that there were fireworks that you figure in Dubai we're already into the new year, and they still had their fireworks display. So bottom line is that that oil money is not the oil money certainly is down dramatically this year, but you can see that, can you picture something? I was thinking to myself, oh my God, you're watching the fire, and then right next to it you get fireworks going off. That's pretty decadent, man, no doubt. Okay, let's go over and we take a look at this oil when we start talking about oil. Let's go look at oil. So what have we had with oil? Oil out here today, we're trading at 37.06. The low on this contract for the year is 35.35. It looks to me like this is going to try to get into the low and crack the low. You know, we had a price spread out here today from 36.22 to 37.79. You know, this thing is pushing into these lows, and it has a little volume in it. What we haven't done yet, which is just sticking out like a sore thumb, is if I put this on a continuous contract, what you have is you have the high volume swing low that was generated out here in 2008. that high volume swing low, there she is $32.40. And on the continuous contract right now, we're at $37.06. What we also have, when we're talking about gasoline, the wholesale gasoline right now is $1.27. Heating oil for all you folks up north on the Midwest, you're dealing with $1.12. All of those numbers, let's go over to the unleaded gasoline for a second. If you take a look at unleaded, it looks to me, now this is going to be wild watching this shakeout, because unleaded, we're at $1.27 wholesale, $1.19, and $1.18 we've hit twice in the last 4 months. When we hit that level, the last time that we came down, we broke it, and we broke it with some good volume. So that sets up, let me pull this back just a little bit. There it is. That would set up, 171.50 cents. Let's see. This is wild. Okay, so the way that gasoline is set up, unleaded gas, it looks to me like it can get down to $1. That's going to be wild, man. Because if gasoline goes to $1, what is going to happen is that, of course, our unleaded is not only going to be under $2, that's going to be banging out at $1.80. So, $1.80 gas, that is one big savings. Now, that being said, now watch this. When we start talking where we are in inflation versus deflation, I'm going to take the same oil chart and show you something here, because this you want to wrap your head around, because we are not going to have the CPI going with us in about 6 more weeks. And what I mean specifically is this. From last year, last year to this year, the inflation has stayed low. One of the main reasons it stayed low is because oil has gone from $107 down to $37. Well, your first leg down, folks, went like this. Your first leg down went from $107, and we hit that low, at $43, and we did that on January 30th. January 9th, we were at $52.46. So you can see what we're dealing with here. You're dealing with a oil market that's already low. So inside the CPI, that is not going to bring the CPI lower. In fact, you can make the argument that if you think oil's going to go over, $40, $45, it'll make it higher. That's going to be a big number. The reason being is that our food costs certainly haven't gone down. Our rent costs haven't gone down. Now the oil cost can go down. There's no doubt about that. We can go lower than $36. But percentage-wise, I don't see that we just went from $100 to $37. I don't see us going from $37 to $10. I actually don't even see $20 oil. There's plenty of people that see $20 oil. I just don't see it. But I'm a technician, okay? So I can see the 32.20 getting hit, and we'll see where we go there. If it turns into an ABC structure on the way down, we have something. The gas market, however, that is, to me, an ABC structure on the way down. And that, okay, so now let's wrap the larger position up. The larger position goes like this, and this is where the yin and yang comes in when the oil goes south. When oil goes south, folks, what happens is that the oil equities go south, the transportation companies go south. There's so many companies that make so much money off oil. That's the yin and the yang of it, okay? So we always like to see lower prices, and bottom line is that as long as you don't own those oil companies, you're in good shape. The amount of oil that is out here is extraordinary. When the oil numbers came out on Wednesday, our oil is stored at Cushing. Cushing, folks, only can fit 10 million more barrels. Bottom line is that we get those Cushing filled up, you're going to end up seeing oil lower. And it's just amazing. There's no two ways about that. Inside the Dow Industrials out here, let's talk about retail for a second. Because when you talk about retail, Amazon, king of the world, no doubt. Doesn't mean that the stock's going to stay up there, but Amazon is king of the world. Walmart, you can see it. The writing's on the wall, man. Walmart has huge problems. I think one of the reasons is that you can get so much on Amazon, just straight across every sector that you buy, Amazon has, folks. And guess what? They deliver for free. You stay right there, folks. We'll come right back. Dow's down 136. Nasdaq's up 45. S&Ps are down 14. We're going to break back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 132. You get the Nasdaq off 44. S&Ps are off 13.5. And don't forget, folks, as you kick into 2013, if you'd like to test drive any of the newsletters at TFNN, you can do it by going right to newsletters. If you'd like to test drive either the Gold Report or my Market Insights, you can do that. You hit newsletters. If you'd like the Gold Report, you do investment newsletters. You can test drive the Gold Report 30 days absolutely free. You want a trading newsletter, as you hit newsletters, hit trading newsletters, you can test drive Market Insights 2 weeks absolutely free. So S&Ps right now, it looks like we're going to be down about 10 for the year. Not the end of the world, bottom line. It's the NYA that has some traction on the way down. The NYA had hit the highs out here. That's going to be down about 5% for the year. The transports, folks, are going to be down like 17% for the year. Unfortunately, what is going to happen is that the aspect of people that do have portfolios, the transports, the high end the transports are 9,300. Right now, you're at 7,500. The folks that do have longer-term portfolios, more than likely, they'll be opening up their statements and they're going to be down. They're not going to be flat. The reason I'm saying that is this, is that the aspect that the S&P is only down 10 points you had to own the top 10 stocks inside the S&P in order to basically be flat. There's a slew of stocks that not only are lower, but they've been dramatically lower. That's the bottom line. So that is going to be a huge problem in the context of people saying, like, hold it, the market's supposed to be flat. Why am I down? And listen, folks, that's how markets kind of always run. Because if the portfolio manager didn't own Amazon inside that portfolio, okay, bottom line, it'd be really hard to make some money. Amazon, no doubt is the animal that went up in an extraordinary way. Amazon is trading at $677. It started the year out at $293. Big number. This is the first year, I believe, since 2000 and, let me look at this, 2008 probably, that Apple is actually down. 2012, yeah, it is. This is well, let's see here, 1 second. 2009, Apple was at 100. That was in September. No, yeah, because it started lower than that. This would be the first year. This would be the first year that Apple actually has been down since 2008. So that's a big number because Apple, no doubt, is owned across all markets also. That's kind of how it's been. And the bottom line is, as I said a little bit earlier, folks, you want to be able to, when the bell's ringing up there, there's nothing wrong with taking the money off the table. As we come into the close, the door's never big enough for folks to get out of the market, folks. And the Dow Industrials right now, it's down $1.60. The S&Ps, we take a look at these S&Ps, and the last sells inside these S&Ps. The futures, that is, they're whacking this thing. It's 2037. The high, the low of the day thus far was generated at 10:30 this morning. That has just got whacked, and that's whacked with volume. So the way that is set up is that's set up for like a 2035 coming into the close out here. And what I do expect that we will see coming into the, and there'll be more selling in real markets, meaning fast markets, volume markets, are going to be established January 4th when we do come back. Don't forget, folks, if you do enjoy TFNN, please tell 3 people over the great holiday. Don't forget, we had a new schedule coming for you. Great schedule, TD Ameritrade, Thinkorswim. If you're an option trader, folks, it's a must. Noon every trading day. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great holiday, a safe holiday. Let's make 2016 a great one. Go get them, folks.